Bill, welcome. 180, 190 would put it right about where it was at the start of this year. And it seems to me the question is, how much can Zoom expand its enterprise presence as it rolls out these new services, and how loyal will its existing customers be in adopting those services? Is that how you see it?
Yeah, well, John, good morning. Thanks for having me. Look, and without question, it's been rough sledding for some time. There's been a lot for investors to digest. But look, I think the good news is, despite what we knew were tough comps, and that was manifested in the guidance, our bet here is that estimates now have been sufficiently reset, and you can look towards greener pastures ahead, I suppose, so to speak. And I think really the bet, as you pointed out, is on the enterprise segment, the growing opportunity there, not only to gain greater penetration for the core meetings product, but to cross-sell products like Zoom Phone and things like Zoom Events and Contact Center over time. And so the big bet here longer term, John, is that this becomes much more of a platform play. And we do like the longer term setup from here.
So if we take a handful of enterprise collaboration names, Microsoft Teams, Cisco WebEx, which has been redesigned, why don't we throw Atlassian in there, for example? You could do Salesforce and Slack as well. What does Zoom have to do differentiation-wise versus those to win enough? Is it exploiting that video advantage that made them a consumer favorite, but now sort of on the digital and retail side is a headwind for them?
Well, those are great questions, and there's a whole slew of big competitors there, not the least of which is probably Microsoft and its Teams platform. Look, we think, as you look at the innovation that Zoom has demonstrated, the R&D engine, that it has, that it can continue to take share from many of the legacy incumbent providers. And so I think you're in an environment where Teams and Zoom can continue to take share from WebEx and some of the other players. And where they've really differentiated themselves is, as you pointed out, building on that meetings customer base, that global brand that they've established to build a broader platform and really be a dominant provider within this cloud communication suite of products. And that's really the sweet spot. They're not trying to be all things to everybody, but really capitalizing on the meeting space to move into phone, contact center, things that are tangential. We think they do have sustainable advantages.
Hey, Will, looking at cash levels, what, $5.4 billion? I mean, I wonder how much of that goes into R&D. They've shown they're not averse to M&A, but the buyback says they're also interested in capital return. How would you spend it?
Well, that's a great question. Look, I mean, they announced a $1 billion buyback, which, of course, I'm sure the street view positively. This is a company that just generated almost $1.5 billion of free cash flow. So, this is a company that's actually quite profitable. And whereas, a year and a half ago, it's trading at 20 times revenue, and it's now trading at 20 times free cash flow. And so they do have opportunities to invest. They just generated 40% operating margins. They don't intend to sustain that level because of some of the R&D efforts underway. So I think, look, at the end of the day, Carl, I think it's going to be a combination of investing organically, looking at tuck-in acquisitions. I'm not expecting anything larger, though possible. And look, at some point, they could upsize the buyback, if it makes sense, given the cash generative capability of the firm.